Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate documents. Today we're diving into a proxy statement from First Solar, a big player in the solar energy world. Think of it as their homework assignment to shareholders, but instead of math, it's about board members and executive pay. And trust me, even sunny companies can have some shady details. This document is called a proxy statement, and it is basically a request for your vote on some company matters. This one comes from First Solar, so let's find out what's up. First Solar is holding its annual meeting in May, but instead of a physical room, it's all happening virtually. They want stockholders to vote on a few key items, mainly electing directors, ratifying their accounting firm, and giving an advisory opinion on how much the top executives are getting paid. This virtual setup allows more people to participate, so hopefully more voices will be heard. There's a distinction between being a stockholder of record and a beneficial owner. If your shares are registered directly in your name, you're a stockholder of record. Most people, however, hold their shares through a broker or bank, making them beneficial owners. Beneficial owners might need to jump through an extra hoop, getting a legal proxy, have to vote at the annual meeting. Basically, it's making sure the right people get to make the decisions. The board is urging shareholders to vote for their slate of director nominees, for ratifying PricewaterhouseCoopers as their accounting firm, and for the executive compensation plan. But here's a curveball. They're recommending a vote against a stockholder proposal about special meetings. Basically, the board is telling you to rubber stamp all of their choices. Risk management is a big deal, and First Solar has a comprehensive process. Management identifies risks, and the board and its committees oversee those efforts. The audit committee looks at financial and cybersecurity risks, while the compensation committee worries about retaining talent and making sure compensation plans don't encourage excessive risk-taking. It's like having different departments watching out for different types of storms. Let's break down who's on what committee. Lisa Crow chairs the audit committee. Michael Sweeney heads the Compensation Committee, Paul Stebbins leads the Nominating and Governance Committee, and Venkata Murthy Rendu-Kintala is in charge of the Technology Committee. Knowing the key players and their roles offers insights into the company's priorities. First Solar emphasizes responsible solar, detailing their environmental and social efforts. Their thin film module technology apparently has the fastest energy payback time and lowest water use compared to competitors. They also recycle over 90% of module materials. It sounds like they are really invested in making the solar industry sustainable beyond just generating power. The company wants to show that their board members have the right skills and experience. You'll see a chart listing things like public company board experience, executive experience, and financial expertise with a check mark next to each director who possesses that skill. Also, they have a demographic matrix which lists gender and race. It's like assembling a superhero team, making sure everyone brings something valuable to the table. How much do the non-employee directors make? They get an annual retainer of $100,000 in cash and $180,000 in stock. Then there are extra cash payments for chairing committees. The audit committee chair gets an extra $35,000 in cash, for example. The lead independent director gets $30,000. It's like getting paid extra to be the team captain. Now, who owns the company? The Vanguard Group and BlackRock Inc. are the biggest shareholders, each owning over 10% of the stock. Knowing who the major owners are can tell you a lot about who has the most influence on the company's direction. PricewaterhouseCoopers, the auditor, billed nearly $3.75 million in fees. The bulk of that was for audit fees, but there were also significant amounts for tax and audit-related services. The audit committee has to pre-approve all of these services. Time to talk about executive pay. The compensation discussion and analysis section explains how the company pays its top executives. The core philosophy is paying for performance and aligning executive interests with those of the stockholders. They use a mix of base salary, cash bonuses, and stock awards to incentivize the C-suite. The company uses something called the Executive Performance Equity Plan, or EPEP. It's designed to reward executives for hitting long-term goals like module sales, backlog, production targets, and operating margin. It is based on real accomplishments and has a big component of company long-term success. For 2024, the annual bonus plan was tied to adjusted net operating income. If the company didn't hit a certain level of adjusted net operating income, no bonuses would be paid. There were also metrics related to year-end net cash, global gender representation, safety, module production, and net bookings. It sounds like they are looking to incentivize everything they can with the high-level employees. To make sure the executives' interests are aligned with the stockholders, they have share ownership guidelines. The CEO has to hold shares equal to 6 times their base salary, while other executives have a 3 times requirement. Basically, they have to have some skin in the game. Here's where we see who's on the compensation committee. No member of the committee was an executive or employee of the company during the past year, so they are all truly independent. They say it themselves. We pay for performance. The compensation committee makes sure that executives aren't rewarded unless performance goals are achieved and that operational metrics aren't achieved at the expense of financial performance. The target bonus percentages for the named executive officers are expressed as a percentage of their base salary. The CEO, Mark Widmar, has a target bonus of 135% of his base, while others are in the 80, 90, 90% range. What are the metrics for the executives? They included corporate metrics like year-end net cash, global gender representation, and safety. There were also R&D and manufacturing metrics such as core cost per watt and copper replacement production. Commercial metrics focused on US-made volume sold and net bookings. The 2024 bonus plan results were less than optimal. For example, the corporate year-end net cash was a very low payout, as well as global gender representation. And for commercial, US-made volume was fine, but net bookings was a disaster. For R&D, costs were low, but both forms of production were struggling. They also have the Executive Performance Equity Plan, or EPE, which gives executives performance units that vest over a 3-year period. For the 2024 grants, the metrics included module sales backlog, average selling price, shoe ray module production volume, and operating margin. The company has employment agreements with each of its top executives. They basically all contain a non-compete and non-solicitation agreement. These contracts ensure continuity and protect the company's interests. Time for a bit of shareholder activism. There's a shareholder proposal to make it easier to call a special shareholder meeting. Currently, you have to hold shares for a year before they count towards the 25% ownership needed to call a special meeting. The proposal wants to get rid of that 1-year waiting period. The board, however, recommends voting against this proposal. They believe the 1-year requirement is necessary to prevent short-term investors from disrupting the company. Finally, we come to the pay ratio disclosure, which is required by the Dodd-Frank Act. The company reports that their CEO's annual total compensation was 171 times that of the median employee. That median employee made about $37,444 a year. The audit committee is comprised of 3 non-management directors, each of whom is independent. They sign off on the financial processes and the work of the auditor. Now, stepping back and looking at the bigger picture, First Solar is clearly a company focused on growth and sustainability. They're investing in new technology, expanding their manufacturing capacity, and trying to be responsible corporate citizens. The numbers show both strength and areas to keep an eye on. For example, the performance metrics for the bonus plan and lack of positive achievement suggest there might be some alignment problems or operational challenges. While it is great that they are putting high emphasis on environmental work and responsible solar, the financial performance needs to catch up in the areas they want to grow. First Solar is navigating a complex market. While there are lots of interesting things happening with this company, thanks for watching, and please like, comment, and subscribe for more corporate deep dives.